take it. Hello everyone, warm welcome to Super Coaching by Testbook. I welcome you all in a very important session which we call it as Finance Current Affairs session. As you all know, this session is really very important if you are preparing for RBI Grade B, maybe SEBI Grade A, or any other examination like SIT-B, IFSC, PFRDA examination, and even it is important for the bank exam candidates. So today we will be covering the Finance Current Affairs from 19th to 21st of January. This session comprises of financial current affairs, that means the current affairs related to the banking sector and the other financial world, but we specifically target the RBI updates as well, where we cover the RBI latest notifications, we cover the RBI press release, along with that we cover the RBI bulletin as well as the RBI reports. So before we start, just let me know in the comment section that I'm audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. Please let me know in the comment section that I'm audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. I assure you, today we will be discussing very important news related to finance, which are not only going to help you in phase 2 examination, but today I have got some news for you which will help you in phase 2 examination as well. So let's get started without any further delay. Okay, here we go with the first news. But before I start the discussion, if you want to download the PDF of this particular session, it will be available on this Telegram channel. What you need to do is just scan the link, join the channel, and the PDF will be uploaded just after this session itself. So the first news from where I'm going to start my discussion is RBI record Forex intervention in November 2024. Now the question is, when we talk about RBI is responsible for maintaining the Forex reserves. We all know that. And RBI maintain these Forex reserves. Not only maintaining the Forex reserves, RBI also use these Forex reserves in order to manage the exchange rate of the currency. Now the question is how RBI manages the exchange rate of the currency. What is the news related to November, and what are the important terms which you must know from this particular RBI notification for your upcoming examination. So let's get started. The first point from where I'm going to start my discussion is, in November 2024, Reserve Bank of India has sold a record of $20.2 billion. The first point which comes over here is, sir, why RBI is selling the dollars? Why RBI is selling the dollars? So when we say that RBI is selling down the dollars, what is the reason behind the same? Whenever we talk about the reason behind the same, guys, am I audible now? I hope now I'm loud and clear. Please reply. I hope now I'm loud and clear. I hope the voice is fine now. You were commenting that there is some issue with the voice. I'll just check it on my end. Please reply. I guess it's fine now. Chalo. So now the question over here is, so why RBI sell dollars in the market? If you know that whenever we talk about the exchange rate of currency, in India, or I would say for India, the exchange rate of currency is decided on the method that is known as floating exchange rate, which basically depends on the basic law of economics, that is demand and supply. So whenever the demand of US dollars in India, increases with respect to the supply, undoubtedly the prices will increase. Let's suppose today $1 is available for 80 rupees. But if the demand for dollar in the country increases, it will result in increase in price, and this price may lead to 85 rupees. So this process where dollar becomes costlier with respect to rupee is known as depreciation of currency. Now, in order to manage this depreciation, RBI comes in the picture. What RBI do? RBI from its forex reserves, that means the reserves of foreign currency with RBI sell those forex reserves in the market. RBI sell those foreign forex reserves in the market. How RBI sell these forex reserves in the market? So RBI will sell these forex reserves to its authorized dealers, which are basically responsible to give you the service of foreign exchange. So if I am RBI and I have sold out my reserves into the market, and now these reserves, or I would say the foreign currency, is reaching in the market, this demand which was pretty high with respect to supply, the supply of foreign currency in the Indian market increases. The moment supply of foreign currency in the Indian market increases, so the one who is importing goods from India, the one who is trying to disinvest from India, the one who is trying to invest outside India, they can easily exchange rupees against this particular foreign currency. If the supply is less, undoubtedly the prices will increase, and in order to avoid this depreciation, or in order to control this depreciation, in order to decrease this depreciation, RBI generally use its forex reserves and sell that forex reserves in the market. In this particular news, you are going to find very, very important terms. Please pay attention. So the next term is record. Record high means in the last few years, or I would say in the last few years data, as you can see very clearly, $20 billion is a very huge amount. In September 2022, it was very huge, that is $10.4 billion. In October 2008, it was $18.7 billion. In July, it was $19.0 billion. In March 2022, it is $20.1 billion. And in November 2024, it is highest in the past few years, that is $20.2 billion. Which means, what I'm trying to say, what I'm trying to present with the help of this particular data, I'm trying to present is that RBI has sold the foreign currency a lot in the Indian market in order to control the depreciation of rupees, because the demand for dollar was pretty high. What was the reason for the high demand of dollars in the country? First reason is, sir, disinvestment of foreign investment, disinvestment of specifically foreign institutional investment, the foreign investment which is done in the Indian share market. We have witnessed a huge disinvestment. Or I would say most of the foreign investors, they have sold out their shares in the Indian market and they are taking back their investment. The reason is Federal Reserves, because Federal Reserves has decreased its rates, and due to decrease in its rates, US becomes more promising market for the investor in comparison to India. So they are diluting their investment in India and they are taking their funds back and trying to invest in the US or any other country outside the country, that is India. So whenever RBI wants to decrease, control the depreciation of rupees, RBI generally sell those US dollars, sell those foreign currency into the Indian economy in order to match with this supply in the Indian economy itself. And the moment supply in the Indian economy of US dollar has increased with respect to demand, the gap between demand and supply decreases and this depreciation decreases. As you all know, in the past few months, Indian rupees has depreciated a lot. What are the reasons? First reason is disinvestment of the foreign institutional investment. Second reason is Federal Reserve and its policy rates. Third reason is volatile Indian share market. Whenever in an economy, in a share market, majority investment or huge investment, a good chunk of investment is done by the foreign investors, generally that share market becomes volatile in nature, and now the same is happening with Indian share market as well. So that is the reason in November 2024, RBI has sold a record of $20.2 billion, which is highest in last 2 years. As you can easily see with the data. Now, coming back to the point. The next point says, RBI net short position in the forward market is $58.9 billion by the end of the month, which was $49.18 billion in October. Now, what you need to understand is, so you need to understand this point, that is short position. What is short position? So the word short position is basically linked to a very, I would say, classic example. Short position basically means what actually you should have done what actually you should have done. But if you have not done that, that means you are running short, which means actually RBI was supposed to purchase $58.9 billion from the Indian market as per the requirement. Sir, but should an exchange rate be decided in international market or all currency rates are decided? No, it depends. In case of US, it's a foreign currency, it's an international currency, it is demanded all over the globe. So in that particular case, global demands will undoubtedly impact its price. But for India, our currency demand in the global market is pretty low. Our currency's demand in the global market is pretty low. So in case of India or in case of countries like India, rather than we talk about demand and supply of Indian rupees in the international market, we talk about dependency of India on the foreign currency. So whenever dependency increases, we need to increase the supply. Otherwise, exchange rates will shoot up. If exchange rates shoot up, it means Indian currency is depreciating, and that is the reason we say that India is following a managed floating rates. That is the reason we say India is following a managed floating rates. Coming back to the point. So what is net short position? Short position is basically what you are short of from your actual targets. For example, RBI has targeted that I should be purchasing $100 billion from the Indian market. I should be purchasing $100 billion from the Indian market. But currently, RBI has purchased only $60 billion. So in that particular case, RBI's net short is what? Sir, RBI net short is $40 billion. RBI net short is what? Sir, it is $40 billion. So RBI net short position has increased to $58.9 billion, which was earlier $49.18 billion. Now, the next point which is important, spot market activity. What is the spot market activity? Sir, RBI purchased $30.8 billion and sold $51.1 billion in the spot market during November. So this indicates that the difference between selling and purchase, RBI has purchased $30 billion, but simultaneously RBI has sold $50 billion in the market. So net position of RBI is selling of the dollars, and those dollars which were sold is of value what? Sir, it is of value $20.2 billion, which is highest as per the last 2 years data. As you can see the data, so from March 2022 till November 2024, lowest was in March 2022, which was $20.1 billion, the sale of net sale of dollars. Net sale means purchase minus sale, and that is minus 20.1, but in November 2024 it has fallen down to minus $20.2 billion. And why this is happening? So because of the depreciation of the currency. So whenever RBI sellings are greater than RBI purchases, that means in the country currency is depreciating, and in order to control this depreciation, RBI is trying to increase the supply by selling out its forex reserves. Moving to the next point. The next point says Reserve Bank of India net short position in the forward market is what? Sir, it is the amount of dollars that RBI has sold in the stock market and committed to buy back in the near future. So it is the position of RBI in foreign market where RBI has sold the foreign currency and RBI has committed to purchase the foreign currency as well. But if RBI is going short, by $58.9 billion as per the data which I just discussed, this means RBI ought to purchase $58.9 billion, but unfortunately RBI has not purchased it, and that is the reason RBI is going short of the same. This position helps the RBI to reduce the pressure on the rupee. So whenever RBI sells a lot, this basically decrease the RBI's, it basically decrease the demand of, it basically increase the supply of foreign currency. It basically decrease the pressure on Indian rupees. How does RBI use its net short position? Sir, RBI use its net short position to reduce the pressure on the rupee. RBI uses its net short position to postpone injection liquidity into the banking system. So how RBI can use this? When RBI wants to increase the liquidity in the market rather than increasing the illiquidity, rather than injecting rupees into the market. What RBI do? RBI basically purchase purchase Indian rupees from the market against US dollars so that the flow of US dollars can be increased. Moving to the next point, the last point says RBI has to buy dollars in future to scare off the position. So what is this net short position? Net short position means RBI has to compensate this position. RBI has to purchase the dollars in the near future. And what is the current outstanding? So the current outstanding is $58.9 billion, which means RBI is net short of $58.9 billion. In the near future, RBI will be purchasing $58.9 billion in order to achieve its targets. Coming back to the news again. The news says why rupee is depreciating. So rupee is depreciating with respect to US dollars is because of the first reason. The first reason is FPI outflows. The intervention was prompted, this intervention was prompted by what? Heavy FPI outflows. FPI means foreign portfolio investment, the foreign investment which is done into your share market, and now this investment is flowing outflow. Outflow means foreign investors, they are taking back their investment, they are disinvesting in India and they are taking back their funds to US. The second question is, with foreign net selling of $2.1 billion worth of Indian equities in November. So what was the net sale? So the net sale of Indian equities, only Indian equities in the share market, was $2.1 billion by the foreign portfolio outflows. Second reason is dollar is strengthening. So why dollar is strengthening? So dollar is strengthening because of two reasons. First reason is Federal Reserves has cut down its rates. And if Federal Reserve has cut down its rates, and we were expecting the rate cut to be around 25 basis point, that is 0.25%, but actually the decrease, we were expecting 50 basis point, but the actual decrease is 25 basis point, and because of this decrease in 25 basis point, it has further strengthened the US dollars. Why? So US dollar has strengthened. So the moment you are decreasing the policy rates, it means it's cheaper to borrow US dollar. If it becomes cheaper to borrow US dollars, the demand for US dollar increases. The moment demand for any commodity increases, its price increases, which makes it strong. So these are the two reasons. First is FPI outflow in India, and second is dollar strengthening all over the globe because of the federal rate cuts. We have witnessed this scenario. In the first half of the financial year 2024-25, in contrast to the first half of the financial year, where RBI was net buyer and RBI has purchased $8.52 billion till September 2024. So from April to September 2024, RBI was actually the buyer of foreign currency. Actually, RBI was buyer of US dollars, but the central bank has become net seller by offloading $20.9 billion. So it means in October and November, India has witnessed a great shock. First is FPI outflow. Why FPIs are flowing outflow? Why FPIs are flowing out? So the reason is quite obvious. What is the reason? So the reason is federal rate cuts, which has increased the demand on US dollars. It has made US dollar borrowing easy, and more of the investment is done in US rather than in India. Is it clear, everyone? Is this clear? So I hope all these points which are related to this particular topic. Why I'm using a word record sold, you must be aware of this. What is the record sold value? You must be aware. What is net short position? You must be clear with it. What is spot market activity? That is important. And after that, reasons of Indian rupee depreciation must be clear to everyone. If it is clear, just give me yes sir everyone, so that I can move on to the next news. The next news is more of I would say capacity, that it will be asked in the phase 1 examination. If you are covering RBI Grade B exam, you need to clear phase 1 as well. So keeping that in mind, today I have included few news which are capable or which will help you to score pretty well in your phase 1 examination. The next news, it talks about Shri Ram Housing Finance. I don't know whether you have heard about this. Shri Ram Housing Finance is a housing finance company, but recently it has been renamed. Recently it has been renamed as True Home. It has been renamed as True Home Finance. So why this renaming has been done? So renaming has been done to circulate a new brand in the market. renaming has been done to promote new trust in the market and with a very great name, that is True Home Financing. Let's try to discuss what all important points can be asked in the examination from this particular news. I have made a very precise content for you for this particular news so that you can cover only that much which is important. First is rebranding of Shriram Housing Finance. So rebranding of Shriram Housing Finance was done after its acquisition by Warburg Pincus and QIA. So recently Shriram Housing Finance has been acquired by Warburg Pincus and QIA, and this acquiring is done for 1225 crore rupees, and the moment they have acquired this company, they have renamed this company. The target is they are going to have a loan book size of 35,000 to 40,000 crores in the financial year 2028. Then investment details. Sir, investment details, as I said, Warburg Pincus and QIA invested 1225 crores, increasing the company's net worth to 3300 crore rupees. Expansion strategy. So this company, that is True Home, is now trying to expand itself. It's trying to expand itself in tier 2 to tier 4 cities. Majorly, it's going to expand itself in the tier 2 and subsequent cities rather than focusing on the target, that is tier 1 cities. Cost of fund reduction, expected decrease in the borrowing cost. We are expecting that the borrowing cost has decreased for this particular company after the acquisition because of the new investment, and this company is looking forward to provide affordable housing services to the customers so that this target can be achieved. So next time, if this question is asked, that what you understand by the term that is True Home Finance. True Home Finance is the organization which has been renamed. Earlier it was known as Shriram Housing Finance, but now Shriram Housing Finance has been renamed as True Home Finance. Got it, guys? Clear? Is it clear? So there is a great probability that this straightforward question can be asked. What are the areas which can be asked in the question? Who acquired, or name the companies which acquired Shriram Housing Finance? What is the acquiring value? What is the net worth of the company? And lastly, what is the target? What are the target cities? This is important. Moving on to the next. The next question is related to PNB and Indian Bank. It's basically an appointment which has been announced by Indian Bank as well as PNB. So what appointments have been done in these two organizations? First, let's talk about PNB. So PNB has appointed new managing director and CEO. The name of the new managing director is Ashok Chandra. Ashok Chandra is going to replace whom? Sir, he is going to replace Atul Kumar Goyal, and he has been appointed for the tenure of 3 years. You know what? Not only public sector banks, but all the scheduled banks of the country, their heads are appointed, or I would say the approval for their head appointment is given by RBI. The moment RBI approve, then only the head is appointed in these organizations. So recently RBI has given the approval on the name which was suggested by the board, and that is Ashok Chandra, and he has replaced Atul Kumar Goyal. Who is Ashok Chandra? Sir, he is the former executive director at Canara Bank. His expertise in digital banking, IT, MSME and strategy. Previously, who was the head? Sir, Atul Kumar Goyal was the head, and he retired on 31st of December 2024. Exact point-to-point information which can be asked in the examination. Next, if I talk about Indian Bank, sir, Indian Bank has appointed new managing director and CEO. The name of the new managing director and CEO is Binod Kumar. He is appointed for a term of 3 years, and he has replaced whom? Sir, he has replaced SL Jan, who was also retired on 31st of December 2024. If I talk about Binod Kumar, sir, he was the former executive director at PNB. He was the former executive director at PNB, and now he has been appointed as the managing director and CEO of Indian Bank. Quickly give me the answer in the comment section, or maybe after watching this video, do give me the answer. Where is the headquarter of Indian Bank as well as PNB? I give you a hint. When we say Indian Bank, Indian Masala Dosa, Chennai ki favorite dish hai. And if I talk about PNB, Punjab National Bank, so we say Punjab ke students Delhi mein commerce padhte hain. So if you can relate these two terms, you can remember the headquarters of many banks. Indian Bank headquarter, Indian Overseas Bank headquarter is in Chennai. PNB, Punjab National Bank, Punjab and Sindh Bank headquarter is in Delhi. With the help of these two statements, you can remember their headquarters. Moving on to the next news. What does the next news says? So the next news is related to Hong Kong and Shanghai Banking Corporation. We all know that HSBC is a foreign bank which possesses its headquarters in London, UK. Its headquarters is not in Hong Kong, neither in Shanghai. Its headquarters is in London, UK. Please check it and reply it in the comment section. Am I giving you a correct information or not? Recently, why this news is important? So this news is important because HSBC has raised an application to RBI that, sir, I want to expand my branches. So I'm trying to discuss a very important term over here. I'm not interested in HSBC. I'm majorly interested in the power of RBI. And what is the power of RBI in which I am interested? So the power of RBI is when a bank is looking forward, for branch expansion or for closing down the branch or even for relocating the branch, approval is need to be taken from RBI. As you can see this very clearly, this was the notification which was given on 1st July 2013, which says very clearly that if a bank wants to expand, that means increase the number of branches, or bank wants to close its number of branches, or bank wants to relocate its branches, then approval is required from RBI. So next time if someone asks you that opening as well as shifting or closing of branches in India is done according to the provision of section 23 of Banking Regulation Act 1949, and for this approval is given by RBI. Now let's come to the news. The news says HSBC India has received RBI approval to open 20 new branches. So HSBC is going to open 20 new branches across the major cities in India, and the total number of branches will become 46. So the new branch, why they are introducing new branches? Because, sir, in the past we have witnessed there is a huge increase in the number of high net worth individuals as well as ultra high net worth individuals in the country. So the moment high net worth individuals are increasing, ultra high net worth individuals are increasing, HSBC is trying its level best to focus this segment of the society, and in order to focus or target this segment of the society, it has decided to open up new branches, and most of the branches are going to come in tier 1 and tier 2 cities. So we have Amritsar, we have Ludhiana, Bhopal, Lucknow, Surat, and many more cities in which 20 new branches are going to be set up by HSBC. HSBC is basically trying to grow its wealth market in the country, and it's going to target high net worth and ultra high net worth individuals in the country. It is a shocking move because in 2016, the same bank has received an approval from RBI to close down 14 branches in India. So earlier, the same bank has seeked the permission from RBI to close down the branches, and now the same bank is seeking the permission, or I would say has received the permission to open 20 new branches in the major cities of the country. Whenever this question is asked, who is responsible to give the approval to a bank in order to expand the branches, in order to shift the branches or close the branches? The answer is RBI. This approval is given under what, sir? It is given under section 23 of Banking Regulation Act 1949. Here is the detail. So when Reserve Bank of India approves branch expansion, it means that commercial bank can open new branch or change the location of an existing branch. So when approval is given for new branch, or if approval is given for branch expansion, then the bank can open new branches and even they can relocate their existing branches. RBI is responsible for this. RBI governs the branch expansion through which act, sir? RBI governs this according to section 23 of RBI Act 1934. RBI may require to inspect the bank's financial condition. RBI inspect the bank's financial condition. Not only financial condition, RBI also inspect the bank's management and capital structure before approving the branch expansion. So RBI has also ensured the expansion must be done with the public interest, which will lead to the benefit for the public. And finally, RBI also allow the banks to install ATMs without approval in certain locations. So when RBI is approving the branches, RBI also gives the approval. If you want, you can set up the ATMs as well in the given locations. So this is the final detail which you need to remember, and it is according to the RBI report. It is according to the RBI report. Is it clear, everyone? Is it clear, everyone? If it is clear, just give me yes, sir. If it is clear, just give me yes, sir. If it is clear, just give me yes, sir. So I hope all the four news which we have discussed today are crystal clear. First one was very important, that is related to the net sale of US dollars by RBI in the Indian market in order to manage the depreciation of Indian currency. Secondly, it is really very important to understand what is the net short position. That is again important. Then these are the questions best for your phase 1. Shriram Housing Finance, renamed as True Home Finance, and PNB as well as Indian Bank, they have appointed new heads. That is important, and RBI has given approval to HSBC in order to set up new branches in the country. You can download the PDF of this session from the link already mentioned, and you can join our Lakshya batch. Use the code MADHAV in order to enjoy maximum discount. Thank you so much. Good luck. I'll be sharing the PDF on the same Telegram channel in next 10 minutes. Good luck. Bye bye. Take care. See you soon.